Okay. All right. So let's take up accounting standard 13 and investment accounting. Both these topics we'll revise it together. Okay. These are separate topics in your study material. I think I've combined them and made the chart. We'll revise them together. Okay. All right. So accounting standard 13, which talks about investment accounting. First of all, what is an investment? Investments are basically some assets. Why are you holding that asset? To get some return in the form of interest or in the form of dividend or capital appreciation. I purchased this year I purchased Wipro shares at 100 rupees with an intention that its price will become 150. From 100, when it becomes 150, I will sell. That is my intention. So what is my intention here? To get dividend or interest or capital appreciation? Capital appreciation means I want the share price to increase. I feel share price will increase. When it increases, I will sell and I will make money. So investments are basically those assets held to get some return, interest, dividend or capital appreciation. That is one. Okay. And normally when you have to buy the investment means you take the help of broker, and broker will not help you to buy the investment at free of cost. There will be some charges like brokerage, stamp duty and all you pay. Like that, if you have any acquisition charges, brokerage, stamp duty, those acquisition charges is a loss for you. Don't transfer that loss to P&L. Add these to the cost of the asset. These are necessary to buy the investment. No, these are necessary to buy the investment. Hence, these acquisition charges don't transfer it to P&L, but add it to the cost of investment because they are directly related to investments. That's the reason. Okay, that is one. All right. Then, if you purchase the investment through exchange, sir, I purchased some company ka equity shares, Infosys ka equity shares I purchased, but not by giving cash, by giving land and building. I purchased Infosys ka shares and I have to pay cash, no? Instead of paying cash, I paid land and building. So that scenario we call it as exchange. This provision is same as accounting standard 10 as well as AS 26. There I will tell you. There we will take it with example. Okay, this is ditto. Whatever comes here, it's the same there also. Okay, I think you know this already. AS 10 also we have covered. We are revising now. All right. So exchange transaction as a thumb rule, we have to value it at what? Fair value. Which ka fair value? Fair value of the asset given up or acquired, whichever is more clearly evident. Okay. More about this with example, we'll take it in AS 10. For now, this is good enough. Yes, exchange transactions are not important here. They are more important for AS 10. So there I will take it. Okay. So broadly, there are two types of investments. Sir, one is, sir, your chart is very nice. Would like to great if you pin that in the description. Thanks, Karthik, but unfortunately, we can't give soft copy, macha. Yeah, you can buy the chart book from the website that I've showed you yesterday. From our website, it's available. Yeah. Butter is not working, yeah, but still I'll take your compliment. Yeah, thank you. Okay, sir, investments are broadly classified into two things: short-term investment, long-term investment. Okay, short-term investment is also known as current investment or also known as trading investment. Long-term investment is also known as non-current investment or non-trading investment. These are different names. Okay, so short-term investment means what according to you? Short-term investments are those investments which are held for less than 3 months, less than 3 months, less than 1 year, 12 months. Everything wrong. Correct. One mistake you also did. He did a lot of mistake. He told 3 cash equivalent. Correct. And you're giving me cash equivalent definition. I'm talking about this. One fine tune you need to do. One word you missed. What is that?
End of financial 12 months.
It is not the actual holding period. Yes, short-term investments are those investments which are held for less than 12 months. When you're talking about 12 months, no, it is not the actual holding period. It is the intention. So if you have an intention to hold the investment for more than 12 months, it becomes long-term. If you have an intention to hold the investment for 12 months or lesser, it will be considered as the short-term. Like that. So it is not the actual period of holding, it is the intention of the holding. Because today if you buy the investment means today you have to show it in balance sheet. Correct? That means today if you purchase means only 1 day is over. So will you classify it as current investment? No. The classification is based on the intention. If you are planning to hold it for more than 1 year, long term. Otherwise, short term. Like that. So it is not actual period. Remember, it is the intention to hold that drives the classification. Okay. So what if your intention changes? You're 2 steps ahead of me. Wait. Okay. I'll come back to you in about 5 minutes. Classification is the next provision which I'll take you through. First, we'll run through this. So short-term investments are those investments which are expected to be held or where the intention is to hold it for less than 12 months. Okay. Short-term investment should be valued at cost or market price, whichever is lesser. Lower of cost or fair value or market value, we say. Done? Short-term investments, all these are not that important. It may come as a this may be important. Other things and all may at best come as an MCQ question. No need to mug it up. Just have a quick glance through of them. That is good enough. Okay. So short-term investments can be valued on an individual basis or category basis, but overall global basis valuation is not allowed. Like, let's say, sir, I've invested in 2 private company ka shares. I've invested in 2 private company ka shares. Both are in software business only. Okay. So I want to value both of them together. That's we call it as category basis. If you want, you can find, sir, investment should be valued at cost or market value, whichever is lower. Now I have 1 investment or 2 investment. If I want, I can find the cost of both of them together, market value of both of them together, and value, because they are one category, because both are in software company, both are competitors. That means, is there any difference between them or more or less same? More. So what AS 13 says is short-term investments can be valued on individual basis or category basis. Both are allowed. If they belong to the same category, you can value them together. You can put them in one basket and value, it's fine. But overall global basis valuation is not acceptable. Let's say I have some investment in gold. I have an investment in equity shares. Gold and equity shares, both I will value together. Acceptable. Both are same or completely different. Completely different. That's what we mean by overall global valuation. Every short-term investment, you can't put it under one basket and say I will value them together. That is not acceptable. Okay. Category-wise valuation, fine. But overall global valuation, acceptable or not acceptable? Not acceptable. That is one. This is for your short-term investment. Another one is your long-term investments. Long-term investment is that those investments where the intention to hold it is for more than 12 months. Long-term investments are valued at cost. Long-term investments are basically valued at cost. If there is any temporary decline in the value of the investment, it is ignored. Permanent decline is accounted. Like, let's say you purchased Infosys shares and you want to hold it for 3 years. You feel after 3 years you will get a bumper return. So you want to hold it for how many years? 3 years. If your intention is to hold it for more than 3 years, means it is a short-term or a long-term? Long-term. Long-term investment has to be valued at cost. I purchased it, let's say, for 10 lakh rupees. I purchased it for 10 lakh rupees. So cost is how much? 10 lakh. So I will show it in my balance sheet. This investment I will show in my balance sheet under asset side at what value? 10 lakh. So if there is any temporary fluctuation in the value of investment, it is ignored. Sir, if I'm buying a share price, means I bought it today for 10 lakh. Tomorrow also it will be 10 lakh only, or it will vary. It may become 10 lakh 5,000, 10 lakh 2,000, 11 lakh, like this, it will go up and down. So if there is a temporary decline, ignore it. It's fine. Appreciation we never record. Even if there is a temporary fall also, we ignore. But however, if there is a permanent decline, it is accounted. Okay. Like, I think in my regular class, I used to give you Maggie ka example. Adani. Adani also you could say, because of that Heidenberg report. What happened to Adani ka shares? Left, right, center, it fell. Correct, no, sir. At that time, no, they said Adani is almost gone. Now they came back. It's a big issue. Yeah, all right. Because at that point of time, did it look like a small downfall or look like a permanent downfall? Look like a permanent downfall. Yes or no? Due to COVID, many companies suffered a huge loss. Their share price fell drastically. That was a temporary decline or look like a permanent decline? Permanent decline. So if it looks like the decline is very substantial and it looks like a permanent decline, means account that decline. Okay, let's say from share price from 10 lakh, it became 2 lakh. This is a small decline or big one? From 10 lakh, sir, its value has become 2 lakh. That means there is a reduction of what, sir? 8 lakh, 80% value has fallen. That means there's a small downfall or big? Big. So if there is a permanent, that means there's a temporary or permanent decline, looks like. It's a permanent decline. That means in this case, you will value the investment not at 10 lakh, but at 2 lakh. From 10 lakh, you have to bring down its value and account it at how much value? 2 lakh. How much you need to reduce it by? 8 lakh. That 8 lakh loss, you transfer it off to P&L account. Pass the journal entry, P&L account debit to investment, 8 lakh, and investment automatically will come back to its balance of 2 lakh, like this. So temporary decline, ignore. Permanent decline, accounted. So how do we know it is permanent decline? Standard says you'll have to assess based on case-to-case basis. There is no particular parameter. They told fall of market share or significant fall in the share price. Share price has fallen by a lot, or if you have lost market share, like due to Patanjali, many people, HUL and all, lost their market share big way, because almost everybody was using Dant Kanti. Now also many people use it. If you remember, you have not heard, not a big deal. Leave. Okay, maybe you are not big on that. Okay, but yes, when they kind of came into the market, no, they caused a big dent for the few big companies, especially when it comes to few products, no, especially that toothpaste and all will become their flagship product. Okay, so like that, if you are lost any market share, let's say your market share was 10% in the market. 10% of the people in the market used to buy your product before. Now only 2% you have market share. That means from 10% to 2% market share is a small value or big value? Big. So loss of market share, fall in share price, negative cash flows, or continuous losses, all this could be an indicator of a permanent decline. So you have to basically, there is no benchmark, all these are some indicators. So based on this indicator, assess whether it is a temporary decline or a permanent decline and accordingly record them. Fine. And however, for long-term investment, you have to value the investment only on individual basis because long-term investments ka value will be quite substantial. That's the reason. So this is about the valuation. Next aspect is, what if your intention changes, sir? Initially, I thought I will hold the investment for 3 years. Later on, I thought I will sell it off in 1 month only. Initially, when I bought it, I thought I will hold it for 3 years. After 3 months only, my mind changed and I told I will sell it off I'll sell it within the next 1 month. So now what, sir? Initially, when I bought it, since my idea was to hold it for more than 3 years, I would have classified it as a long-term investment. Now I want to sell it within 1 month, means now it has become current investment. Yes or no? Based on your intention, if your intention changes, your classification also should change. So that's what I've written here. If you're going from L to C, L means long-term investment, C for current investment. This is how I remember. If you want, you can remember this like this, but you still have to remember. So if you are going from LC, LC means CC. LC means CC. L here stands for long-term investment. C here stands for current investment. If you are going from long-term investment to current investment, then you have to value the investment at CC. First C for cost, other C for carrying amount. Cost or carrying amount, whichever is lower. That is the first thing. Okay. This is from what to what? Long term to short term. It could be other way around also. That is CL. If you're going CL, C for current investment, L for long term investment. If you're going from C to L, then CL means CF. CL means CF. C here stands for, you're confused now. C could be for cost or it could be carrying amount. You're going to which category now? You're going to which category? Long-term category. How should the long-term investment be valued at? Cost. I mean, this here denotes for what? Cost. Don't get confused. It is not carrying amount. It is cost. Okay. Cost or F here stands for what? Fair value. Cost or fair value, whichever is lower. Like this. So if your intention changes, you do the classification. On the day your intention changed, find out here, when you're going for LC means you have to find out CC. C for cost. Another C for carrying amount. On the day your intention changed, on that day find out cost. On that day you find out carrying amount. Whichever is lower, value the investment at that lower amount. Same. If you're going from CL means you have to use CF. Find out the cost. Find out the fair value on the day your intention changed. Lower of the two will be adopted to value the investment now. That is your classification wala change. Yes, sir, all this they will not give you. You need to remember it. Okay. So these things are things, whatever is memory driven things. No, if you want, you can use the chart books. If you're buying one, you can use the chart book and underline that. So that on the examination day, let's say when you have like 15-20 minutes on the examination day, quickly you can run through them. Like in previous case, turnover and borrowing limits. Now you may remember after one day if I ask you. Yes, no, because so much of information will not be able to remember. So have those information. Either you can take that chart book to your, not to the examination hall, till the examination hall and leave it outside after that. Okay, and try to glance them once. Or if you don't have chart book, if you have revised through the revision video of us, it's fine. All these limits, write it in your one, or you maintain some 2 to 3 pages, maintain some sheets. In that sheets, write down. Okay, it's a chit, but don't carry that chit to your examination hall. Quickly glance through that and throw it out. Okay, like this, so that you remember it. Okay, because you have to remember this till your examination. After that, you don't have to remember because Google is there. Google Mata will help you. Okay. For till in examination, no Google Mata. You're only Mata, you're only Pita, everybody you are only. Okay, Saru. So do remember it. So wherever there is a limit, that's what I used to do for all your income tax. And that time we didn't have so much of accounting standards, so we didn't have so much of drama. Because we had accounts paper was mostly for us when we wrote CA final, it was all consolidation, amalgamation. They used to give 4, 4, 5, 5. It was crazy big problem stuff. 5, 5, 6, 6 pages it used to go. Half of them never used to understand what they're asking only. That level of question used to come. Full head spinning questions it used to be. Now, since the standard has become too complex now, those sort of problems they have reduced now. Okay. But income tax, we had a lot of cases and all. No? So I used to write down this. Some section number. 32 stands for this. Or like 109. I mean, whatever things now I used to write down like that. So that it'll help me with my memory. If you feel that helps, you can do that. Or I think every faculty is now giving chart book. You can take help of that if you don't want to kind of put in the extra effort. But anyways, that I will leave it to you. Okay, coming back to this, sir, maybe I'll quickly glance through this. We will immediately apply all this in the question. All these are question specific pointers I've written. These are not theory. Whatever you see in the problems, I've brought it in over here. One is the X interest price. So next thing is they will ask you to prepare investment accounts. We have to prepare investment accounts. Investment ka ledger we need to prepare. You can make an investment either in equity shares or in bonds or debentures. So they will ask you to prepare that. To what are all things you will encounter in those? First thing I've called out here. One is the X interest price. So when you buy the bonds or debentures, okay. So X interest here stands for purchase price excludes interest. X here stands for exclusion. The purchase price of the investment excludes interest. Just know that for the time being. More about meaning if you have forgotten, I will take you through in the question. Okay. Cum interest means purchase price includes interest. The word X means excluding interest. The word cum means including interest. Okay. That is one thing. Okay. So now you think about it, sir. Interest on debenture, is it a balance sheet item or P&L item? Interest is a P&L item, but debenture purchased and all as an investment is a asset. It's a balance sheet item. Now both they have combined because cum interest price means what? Purchase price or selling price of the debenture includes interest. Debenture is a balance sheet component. Debenture interest is a P&L component. Both they have merged. Acceptable or not acceptable? Not acceptable. Hence what we have to do. If they have given cum interest price, you need to find out how much interest is included and you need to exclude it. Exclude means you need to deduct it. How much problem may we will see. Now this is the importance of this. Next one important thing you need to remember is accrued interest. What is accrued interest is? So normally accrued interest comes when if you're holding some other company ka debenture as an investment, you will get returns periodically. Usually in the problems, they say return is paid, interest is paid on a half yearly basis. Usually that's how they give it in the question. Is it compulsory or it could be anything? It could be monthly also, quarterly also, half yearly also, or yearly also. But usually we see in the problem half yearly. So based on that, I've constructed my chart book notes here. Okay. So now let's say, sir, interest is paid half yearly. Interest in first case, let's say, is paid on 30th June first and 31st December once. Company pays 6 months ka interest first on 30th June. Another 6 months ka interest they pay on 31st December. This is the interest due date. But we are following April to March wala accounting year. We are following April to March. Now you think you purchase some other company ka debenture. Our year is from April to March. But you have received the interest till which date? You have received the interest only till 31st December. Because after 31st December, next interest you will receive it on June. But my year ends on 31st March. That means I have received the interest only till 31st December. January, February, March. Is it part of my financial year? Yes. Has interest accrued? Yes. Is it received? No. That only we calling it as accrued interest. So do not forget the accrued interest. Here the interest will be for January, February, March. They are part of your financial year, but interest you have not yet received. So basically if your interest due dates and if your accounting year, if it is not same, if it is not same, then only there will be an accrued interest. Take another scenario. Let's say interest is paid first on the other company where you made the investment. They pay the interest only on 2 dates. Those 2 dates are 31st March and 30th September. On 31st March, they pay 6 months ka interest. On 30th September, again they pay 6 months ka interest. Half yearly interest they are paying. You're, let's say, following accounting year as Jan to December. You're following accounting year as Jan to December. Now check, sir. You have received the interest till 30th September. But your year ends on September or goes up till December? Your year ends on December. But you have received the interest only till 30th September. Because after September, you will receive the interest in March. That is next March. But before in that only your 31st December only your year closes. So you have received the interest till 30th September. But your year ends 3 months later, which is December. So October, November, December. Is it part of your financial year? Yes. Has interest accrued? Has those 3 months passed? Yes. For those 3 months, did you have these debentures with you? Yes. So has interest accrued? Yes. But have you received? No. So means you have to show accrued interest again for how many months? 3 months. So if there is a clash between interest due date and accounting year, you will get some accrued interest. Do not forget that. That will not be given to you in the question. You need to remember. Suppose interest due date was 30th September and 31st March. This is your interest ka due date. Your accounting year is also 1st April to 31st March. Can you tell me, will there be any accrued interest here? Your due date for interest is September and March. Accounting year is also April to March. Now think, is there any accrued interest? No. Why no accrued interest? Sir, you have received the interest till 31st March. Your interest also or year also ends on 31st March. So that means till whole year you have already received interest. No? That means is there any interest, accrued interest here? No. So if the interest due date and if your accounting year is in sync, if it is same, then you will not have accrued interest. If it is not same, here it is same or different, then only accrued interest will come, and accrued interest will only come for 3 months. Fair enough. In examination, they'll always give you this scenario, because if they give this scenario, accrued interest will not arise. That is the reason. And you will see in the problems this one. Done, are people? Okay, this is with respect to the debentures. Don't worry, even if you have not got it or forgotten, it's fine. We are anyway we're going to do another problem. One full-fledged problem I'm going to do with all this. It will come. But for those of you who remember, well and good. Okay, the next is all these are relating to bonds or debenture held as investment. Next will be you can also buy equity shares as an investment. If you're buying equity shares as an investment, no sir, they use one term called equity shares purchased on a come right basis or come dividend basis. When they use this word come here in this IS 13 terminology means what, sir? Come means including, X means excluding. So here they're saying come right basis or come dividend basis. What this means is if you purchased any shares on a come right or come dividend basis, the holder or the purchaser of these shares will get dividend. He'll be eligible to get right shares, which I'll tell you, and also he'll be eligible to get dividend. This dividend he'll be able to get even if such dividend relates to last year, but if it is declared in the current year, still he will get it. Or let me do a thing. This maybe I'll take you through one question. Maybe better to understand with the help of an example. Otherwise, I have to waste some time giving you some data. In which we are going to do one question, we'll take it there. Is that okay? Better understood there. This I'll take you one more problem through this. For now, let this be on hold. So we have gone through this. Can we apply this in one other question? Okay, come to question number 9. One second. Maybe we'll take this. An RTP May 2024 question. We'll run through this question only. A holds 2,000 15% debentures of 100 each. So how many debentures? 2,000. Each ka face value 100. In XYZ Limited as on 1st April 2022. So they're saying A Limited purchased or he holds. Holds. That means what, sir? These investment did we purchase on this date or we had it already? We had it already. That means this is what, sir? Can I say investment account ka opening balance? Because they did not use the word A Limited purchased. They use the word he is holding on this on 1st April. So this is opening balance of investment. Yeah. At how much cost? 2,50,000. Great. Interest is payable on these debentures on June and December. Oh, okay. Interest is payable on what basis? Monthly basis or half yearly basis? Half yearly. First 6 months ka interest they will pay on 30th June. Next 6 months ka interest they will pay on 31st December. Now you know what the interest, what they will say. Here only clue is there. They holding the debenture on 1st April. So year is beginning on 1st April 2022. And that means your year will end on which date? 31st March 2023. So first interest you will receive on 30th June 2022. Next interest you will receive on 31st December 2022. Agreed? Sir, you have received the interest only till 31st December 2022. But your year ends 3 months later, which is 31st March 2023. So what is the difference between these three? Jan to March. How many months? 3 months. For 3 months, is it part of your financial year? Yes. Were you holding the investments? Yes. Has interest accrued? Yes. But have you received? No. I mean, should you account accrued interest? Very much yes. Okay, Saru? Alright. Let's go through the other data. Following details of 15% debentures are purchased and sold during the current year. So current year, we already wrote that. Okay. So they will give you in these problems multiple purchases and multiple sales. Maybe 2 times they will give you purchase, maximum 2 times they will give you sales. But otherwise the problem will become really, really lengthy. Usually we see that. So on 1st May 2022, 1,000 debentures we purchased. But on what basis? Come interest basis. Come interest means what, sir? Purchase price includes interest. But debenture is an investment. It's a balance sheet component. But interest is a P&L component. Can you merge the two? No. But have they merged the two? Yes. Hence what we have to do? We have to find out how much interest is included and we have to exclude it. That is one. How much did you pay for these debentures? 1,05,000. Few months later on 1st November, 1,200 debentures are sold at what value? X interest basis. X interest means here selling price. Selling price includes interest or exclude? Excludes interest. So interest is there. Just that the interest is not included in selling price. X interest means Interest is very much there, but it is just that the interest is not included in the purchase price or selling price. Here it's a case of a selling price. How much did you sell it for? 128, 200. Again on 30th November, 500 debentures you purchased on an X interest basis for 54, 500. Then again 900 debentures you sold it on come interest for 1,80,000. Okay. These are all data they've given. Some opening balance we had, 2 times we purchased, 2 times we sold. What do you need to prepare? Investment account you need to prepare using what method? FIFO method. So normally when you sell an investment, no, you will end up making some profit or some loss. That profit or loss can be derived either using FIFO method or a more popular method is average cost basis. If they don't mention the method, always take average cost. Okay, why? I'll tell you after this problem when we do. Because FIFO means you have to do some extra calculation. Okay. So, but one problem I'll take you through FIFO. Another problem I will take you through weighted average. So, both the things you will be comfortable with. Okay. So, let's run through this. Sir, investment account ka ledger is very, very simple. Sir, what is the journal entry for investment purchased? Investment to bank. What is the journal entry for investment sold? Bank to investment. Okay, so that is very, very simple. You will not get marks for that. The marks, what you will get is for the value. Because here they have told X interest to, come interest to, this to, that to, profit sale. For all this working note, you will get majority of the marks. So that ledger, no, we will do it at the end. Because that is the easiest. Hardly any dumb in those questions. Nothing it is. Okay. The main important concepts here are the working notes. So the first working note you will put it up is the interest working note. This will be the most important working note. Okay, sir. And this working note, sir, we'll do it in a chronological order, meaning date wise. Whatever transaction has happened date wise, in that way we will present this working note. And when you prepare investment ledger, you have to post the entries. By looking at this working note only, postings you do, because this is anyway arranged date wise. Ledger posting also has to be done chronologically or date wise. So this working note will help you. First, sir, let's have the interest due dates. Have they given the interest due date in the question? Yeah, June and December. I've called out that. But year ends on December or goes up till March? Goes up till March. So the first thing is accrued interest. Sir, accrued interest means interest income which you have not yet received. Interest income not yet received. Sir, what is the journal entry for interest received? Bank account debit to interest income account or interest received account or whatever you can call it. Maybe I'll call it as interest received. Let's say 1 lakh, 1 lakh. Okay. Sir, this interest has accrued, but you have not received. Will you pass journal entry or ignore? Current year, interest has accrued, but you have not yet received. Will you pass journal entry or ignore? Pass or ignore? Pass. What entry you will pass? Can you pass bank to interest? No. You will write interest receivable account, or you can write accrued interest account, whatever name you want to use. Interest receivable account or accrued interest account debit. Correct? You can't pass this entry. Instead of that, you will pass accrued interest account debit to interest income account or interest received account. Correct? This interest received is an income or it will be transferred off to P&L. What about this accrued interest? Accrued interest is what, sir? This accrued, this interest is accrued, but you have not yet received, means this has debit balance, no? So you will show this as an asset in your balance sheet. Under current assets, you will show this as an income. Correct? Matlab, you will show it as a current asset in your balance sheet. Agreed, people? Now, entire investment, did you purchase it in the current year or some investment you had it in last year also? Sir, look at this line. They're saying ALBC Limited holds 2000 debentures. They did not purchase it. They are holding it. That means they are holding it since last year. Sir, accrued interest concept only comes for current year or every year? Every year. So last year also you have received the interest only till 31st December. But your year is ending on March. Means how many months interest has accrued but not yet received? 3 months. That is Jan, Feb and March. Agreed? So last year you would have already passed this entry. Correct? That means this account will have an opening balance. This account, because last year ka closing balance only will become current year ka opening balance. So last year, have you passed this journal entry? Yes. Maybe may not be for 1 lakh. 1 lakh I've just taken as a random number for explanation. Amount is different, but entry you would have passed? Yes. So first thing you will start in your interest working notice, accrued interest ka opening balance. Is that okay? Because does accrued interest is there in the last year? Yes. That means last year ka closing will become current year ka opening. Is that given to you in the problem or not given? Not given. We need to find out. Okay, na sir, everybody? Sir, interest is always calculated on what value? Face value. Sir, how many debentures you own in the last year? 2000. What is the face value of each of them? 2 lakh. I mean, each ka face value is 100. So total face value will become 2 lakh. How many months interest accrued have you passed the journal entry for last year? 3 months. Which are those 3 months? Jan, Feb and March. So face value is 2 lakh. What percentage debentures are these? 15%. So 2 lakh into 15% if you do, you'll get whole year ka interest. Whole year ka have you passed or only 3 months ka? So into 3 by 12 you do. How much is that? 7,500. So this is accrued interest ka opening balance, which has to be captured in the ledger. Hence I have done this. Clear? After this, go on starting looking at the transaction and do it update one by one. Can we do that? Okay, so this is over. I'll put off a small tick against this. Next, next look at the table. What came next? May 1st, 2022. What did you do? You purchased the debentures. On what basis? Cum interest basis. Cum interest means the purchase price includes interest. How much interest is included is what we are trying to find out now. When did you buy, sir? 1st May. Watch out for this. You purchased on which date? 1st May. Sir, you have purchased the debenture means somebody else has sold you the debenture. You have purchased the debenture means somebody has sold. That somebody on these 1,000 debenture, they have received the interest lastly on which date? On 1st May they have sold. They have received the interest only till 31st. What is the interest due date? The interest due date again, I'll write it over here. What did they say interest due date is? 30th June and 31st December. 30th June and 31st December. So on these 1,000 debentures, the seller has received the interest only till December. Because after December, he would have received the interest on 30th June. Before June only he has sold off. Correct? So he has received the interest only till 31st December. How many months interest has that seller lost? You are the purchaser. If you are purchaser, somebody has to be seller. Seller on these 1,000 debentures, how many months interest has he lost? He has received the interest only till 31st December. So count, leave December. January, February, March, April. It's 1st May. So leave out 1st May. How many months interest has he lost? 4 months. Is he your cousin? Huh? Maybe, sir. We don't know. No. Yeah, obviously, sir. If seller has lost some interest means, what will he say the buyer? Boss, I have lost 4 months interest. You compensate 4 months interest. So basically 4 months interest is included in the purchase price. That is the reason they're saying it is a cum interest price. Understood? So we have to find out that 4 months interest and exclude it. Easy. How 4 months? They've received the interest only till 31st December. But sale date is 1st May. So if you count January, February, March, April, that is your 4 months we're talking about. So calculate. So how many debentures is sold? 1,000. Interest calculation always on the face value. So write the date here on 1st May. You write what kind of a sale is this or what kind of a purchase is this? Interest on cum interest purchase. How many debentures you purchased? 1,000. Each ka face value 100. 1,000 into 100 is how much? 1 lakh. 1 lakh is the value of face value of the debenture. Interest you will calculate on face value. So multiply 15%. How many months ka interest? 4 months ka interest. If you calculate, how much are you going to get? 5,000. So basically this 5,000 is included in the purchase price, which we need to exclude it. That we will exclusion and so on. We'll do it later. First we'll calculate the interest. Till you are good? Okay. Sir, after May, as per them, the transaction is on 1st November. But I told this working note is done what, sir? Chronologically. Do you think between 1st May and 1st November, any other transaction is happening? Yeah. Interest due date is appearing. So, yeah. On 30th June, you will receive the interest on your holding. How many ever debenture you are holding, on that you will receive interest. Check. From year beginning, you had how many debentures? 2 lakh. Now you purchased how much more? 1 lakh. So how many you have now? 2 lakh plus 1 lakh, which is 3 lakh. Now you will receive the interest from the company on 3 lakh debentures. At what rate? 50%. But the other company is paying, they're keeping it very simple. They pay the interest on a half yearly basis. So on 30th June, how many months ka interest they will pay you? 6 months ka. Again on 31st December, again 6 months ka interest they will pay. So into 6 by 12 you do. Because other company is paying you interest on a half yearly basis. Hence 6 by 12. Okay. So 3 lakh into 15% into 6 by 12 will give you 22,500. That you as an investor, you have purchased the debenture means you will pay interest or you will receive interest. Don't do the calculation from company perspective here. Okay. Now you are accounting this debenture from the company who's issuing perspective or investor perspective. The chapter is AS13. AS13 talks about investment. Now you have invested in some other company ka debenture. So that means that company will pay interest, but you will receive. From your perspective, from the investor perspective, we are doing all this working out now. So you are receiving the interest. Hence, I'm calling it as interest received on holding. Yes, sir. All right, next go for the other one. Next, what transaction happened on which date? 1st November. What did you do? You sold. Okay, sold at what price? X interest. So X interest means what? Excluding interest. Sale price excludes interest. Interest is there. Interest is there. Just that the interest is not included in the selling price. X interest means, don't confuse that. Interest is not there. X interest simply means purchase price or selling price does not include the interest element. Okay. Now, how interest is there, sir? Check logically, sir. Now, you have sold, you have sold how many debentures? 1,200 debentures. On these 1,000 debentures, 1,200 debentures rather, you have received the interest from the company lastly on which date? 30th June. Because next interest will be paid on December. Before December only you sold off. So on these 1,000 debentures, you as a seller have received the interest only till 30th June. You sold it on 1st November. So how many months interest have you lost? How many months is that? July, August, September, October. 1st November, so leave out the 1 day. So how many months interest? 4 months interest you as a seller have lost. What will you tell the buyer now? Boss, I have lost 4 months interest, so you compensate. Okay, so you will recover this money from the buyer. Okay, but how much ever money you have recovered from the buyer, that is not included in your selling price. That's what X interest means. X interest does not mean interest is not there. X interest means interest is there, just that it is not included in the purchase price or selling price. Is it easy? So how many debentures you sold? 1,200. So which date did you sell? 1st November. Interest on X interest sale, you call it. 1,000 debentures you have sold, each ka face value 100, so total 1,000, 1,200. Yeah, 1,200 debentures you have sold, each ka face value 100, so total face value will be 1,000 or 1,20,000. Interest calculation always on the face value. 1,20,000 into 15%. How many months interest you as a seller have lost? 4 months. So into 4 by 12 you do. How much you going to get? 6,000 rupees. Like this. This 6,000 you will recover from the buyer. Done now? Okay. After 1st November, what is the next transaction? 30th November, mein, what did you do? 500 debentures you purchased. On what basis? X interest. X interest means purchase price excludes interest. Does it mean interest is not there or interest is there? Interest is there, just that it is not included in the purchase price. Okay. Now, again, you purchased. Your purchase means somebody has sold. That somebody on these 500 debentures have received the interest from the company lastly on which date? They have received the interest only till 30th June. Because after June, interest will be paid on December. But before December only they have sold off. So how many months interest has a seller lost? He has received the interest only till June. So July, August, September, October and 30th November you have sold. So November also include. So July, August, September, October, November. How many months? 5 months interest seller has lost. So you as a purchaser should compensate. How many months? 5 months. So calculate. 500 debentures. 500 into 100 is how much, sir? 50,000. How many months interest will you calculate? 5 months. That will become how much? 3,125. Like this. Done now? Okay. Next is 31st December, you made a sale. So 31st December, you are receiving interest also, you are making a sale also. Whenever they give you sale data, purchase data, no? Okay. So first account the sale data, then account the interest received on holding card date. Which date did you sell? 31st December. How many months, how many debentures have you sold? 900 debentures. What price may? Come interest price. Come interest price means the selling price includes interest. Okay. So now, sir, how many debentures did you sell? 900. On these 900 debentures, lastly, you have received the interest till 30th June. So 31st December, we will receive interest. No. On the interest due date, if they say we have purchased the debentures or sold the debentures, here we have sold, no? We have sold the debenture means the other person, whoever is purchasing, they will receive the interest. That is the reason they have purchased the interest on the last day. Is that okay? We will not get it because we have already sold. So who will get it? Purchaser will get it. So on these 900 debentures, we have received the interest only lastly on 30th June. How many months interest have you lost? 6 months. Because company will pay to the purchaser. I have lost, as a seller, I have lost how many months interest? 6 months interest. So calculate that. 900 into 100 is 90,000. How many months interest will you calculate? 6 months, which will be how much? 6,750. That much I will recover from the seller. And seller will collect this money from the company. Like this. Okay now? Alright, any other transaction they have given? Yeah, immediately on 31st December, there is one more transaction called interest received on holding. So on 31st December, again interest received on holding. Check, sir. From the beginning, if you want to calculate, or calculate it from here. Till here, how many debentures you were holding? 3 lakh. You sold 120. So that means value will increase or reduce? Reduce. So 3 lakh minus 120 you do. It is 180. Again, you purchase 50. 180 plus 50 is how much? Basically, deduct this, add this. It will become 230. Again, you sold 90. So 230 minus 90 is what? 130? 140. Okay, 140. Okay. Then again, you, that's all. Correct, no? Fine, no? So that means how much, what is the face value of the debenture you are holding? If you do all this plus minus, 3 lakh minus 120 plus 50 minus 90, if you do, how many debentures are you holding? Total face value of the debenture held is 1,40,000. So that much debenture if you are holding means you will receive interest from the company for how many months? 6 months. So into 15% into 6 months, that will be 10,500. That's where the transaction stops. But they will not give you two hidden adjustments which you have to compulsorily do it, which is what, sir? Accrued interest ka opening balance. If accrued interest has opening balance means it relates to last year. Current year also we have debentures. So that means accrued interest ka will also have some opening balance. Because we have received the interest only till 31st December. But our year ends on 31st March. So January, February, March. Are we holding debenture? Yes. Okay, has interest accrued? Yes. Have you received? No. So calculate accrued interest on 1,40,000 debentures. Because that much only we are holding till now. Okay. So 1,40,000 into 15% for how many months? 3 months. This is your accrued interest ka closing balance, which becomes opening balance in the next year. Like this. Done now. This is working note number 1 for interest, the most important one. Alright. Now, have you purchased the debenture? Yes. So let's do one working note for purchases. I think here only I must have put it now. Working note number 2. Here actually it is in this problem, it is not there, but usually in the problems they give you some stamp duty, brokerage and all that stuff. So this working note becomes important. Sir, how many times have you purchased debentures in the current year? 2 times. One on 1st May, another one on 30th November. First have those columns. 1st May, what kind of a purchase? Come interest purchase. 30th November, what kind of a purchase? X interest. They only told. Okay. Sir, come to the 1st May ka purchase. How much did you pay to buy these debentures? 1,05,000. So update that. The purchase price or the how much is 1,05,000. Keep this in mind. What kind of a purchase is this? Come interest. They only told in the problem. Here. You purchased on what basis? Come interest. That's what I've listed out here. It's a come interest purchase means the purchase price includes interest. Can it be included? No. But have they included? Yes. So what we have to do? Exclude it. So that means some interest is included in 1,05,000 which you need to exclude. So that means we have to calculate interest, sir. No. Or you already calculated. Check which day did you purchase. 1st May. Come back to your interest working note. On 1st May, how much is the interest, sir? 5,000 rupees. This much interest is included in your purchase price which you need to exclude. So deduct 5,000 rupees. Okay, now this you directly get it from working note number 1. No need to calculate again. But whenever you buy the debentures, you will have some stamp duty and you will have some brokerage. If at all you have that, add it. In this problem, it is not there, but in the format, I've just brought it. So in case if it comes in your examination, do not forget to add this acquisition cost. So that gives you your net purchase price. How much, sir? 1 lakh rupees. Okay. Same data you do it for 30th November. 30th November, mein again you purchased, but on what basis? X interest basis. Okay. 30th November, mein how many debentures did you buy? 500 debentures. How much did you pay for it? 54,500. So purchase price is 54,500. Is there any brokerage or stamp duty? No. What kind of a purchase is this? X interest. So does that 54,500 include interest or no interest? No interest. So should you have to deduct anything? No. So this itself becomes your net purchase price. Manageable. Okay. So this is your purchase price. We'll finish off all the working note, then post it into the ledger. Next is, sir, have you sold some debenture? Yes. So when you sold some bonds or debentures, you will end up making some profit or you'll end up making some loss. So next working note is to find out the profit or loss on sale. Okay. So how many times have you sold this debenture here? You have sold it 2 times. One on 1st November, another one on 31st December. 1st November ka sale is X interest. 31st December ka sale is come interest. So I'll note that down. 1st November ka X interest, 31st December ka come interest. On 1st November, at what price did you sell? 1st November, when you made a sale, you sold it for 1,28,200. And here you sold it for 1,18,000. So both I'll capture. 1,28,200 and 1,18,000 is your sale proceeds. Sir, only at the time of purchase you will incur brokerage or also at the time of sales? Also at the time of sales. If there is brokerage here, deducted. So why there you in the purchase working note you added? Here you are deducting. Purchase may you are adding, sales may you are deducting. Why, sir? Sir, when you purchase 1,05,000 also money will go out. Brokerage money also will go out. And AS 13 says to buy this investment brokerage are necessary. Hence don't transfer this brokerage to P&L account. Add it to the cost of investment. So we add it. In this problem, it is not there, but if it is there, we would have added. But when you sell, no, sir, 1,28,200 you will get. 1,28,000 you will recover. It's an inflow. Yes, no, this 1,28,200 is an inflow. But brokerage is an inflow or outflow? Outflow. So when you're talking about sale proceeds, we want the net money. Okay, let's say there is a brokerage of 1,000. That means what, sir? When you sold, you recovered 128,200. One hand may you are collecting 128,200. Another hand may you are paying 1,000 rupees to the broker as brokerage. So how much money really come into your hand? 128,200 or 127,200? 127,200. That's the reason if you have any brokerage, it becomes an outflow, reduce it here. So it's not partiality, it's just pure logic. Okay, now, all right. So sale proceeds you take, and if there is brokerage, you reduce it. In this problem, if you have any brokerage or no brokerage, no brokerage. If at all it is there, what do you have to do, sir? Deduct it. Okay. And if there is any interest component, you need to reduce, but you will reduce it only for what? Only for cum interest. Which interest is cum interest here? Here is it cum interest or X interest? X interest means interest is included or not included? Not included. So anything to be deducted? No. So net sale proceeds will be same. But here when you sold, what kind of a sale is this? Cum interest. Cum interest means interest is included in the selling price. Which day did you sell? 31st December. Should we have to find the interest or already did? Already did. Come to your 31st December ka. Check interest on cum interest sale is how much? 6750. So this much interest is already included here, which you need to reduce it. Once you reduce, you'll get net proceeds to be this much. Comfortable with these two? Okay. So this is the cost. I mean, this is the selling price, net selling price. To get profit or loss, what are the two things you'll compare? Cost price and selling price. Selling price you already got. Now the only thing we need to get it is what, sir? Cost price. But hang on, what did the question say? You have to calculate this using what basis? FIFO basis. What does FIFO say? What is the first FIFO ka full form? First in, first out. So what that means whatever investment you buy first, you will sell that first. Correct? That's how FIFO works. Okay. Now you tell me, sir, which debentures did you buy first? This one or one more? Not this. These are all debentures purchased and sold in the current year. You already had some debentures since last year. Here they've given in the previous page. How many debentures since you were holding from the last year, sir? 2,000. Okay. First 2,000 debentures will be sold because that's how because they are asking FIFO method. That's the reason. Okay. Now, do you know the cost of this 2,000 debenture? Yeah. All right. Sir, 2,50,000 or maybe 1 minute. I'll put it up in the next page. 2,50,000 is the cost for how many debentures? 2,000 debentures. Okay. Sir, first time when you sold, how many debentures did you sell? Maybe I'll bring that data as well. How many debentures did you sell? 1,200. I'll write it over here. Here you sold 1,200 debenture, and here how much did you sell? As per the question, next time you sold 900 debentures. So first you sold 1,200 and then 900. Let's do 1,200 ka calculation first. How many debentures you had it since last year? 2,000. First time you sold entire 2,000 or only 1,200? 1,200. It's like this. What is the cost of that opening balance? We had 2,000 debentures from year beginning and cost was 250, no? Yeah, 2,50,000. 2,000 debentures we had from the beginning. Yeah? And total cost of this is how much? 2,50,000. So for 2,000 debentures, the cost is 2,50,000. Entire 2,000 debentures did you sell here or only 1,200? For 1,200, how much is the cost? Proration. How do you get X? Basically 2,50,000 divided by 2,000 into 1,200. So what is the cost? 1,50,000. So cost is 150. You sold it for 128,200. That means you sold this investment at a profit or loss? Loss. How much loss? 21,800. Easy now. Like this. Can we do it for the next one? Okay. Sir, you had how many debentures from the last year? 2,000. In that, how much you already sold now? 1,200. So how much is remaining in this basket? This I'll call it as lot number 1. In this lot, how many debentures are remaining? 800. Next time when you sold how many debentures? 900. That means out of 900, 800 will come from first lot. Okay. After that, how much, when did you buy? After that, you purchased 2. You'll take the what purchases? The earliest purchase. Earliest purchase is what here? 1,000 or 500? 1,000. Right? 1,000 you purchased on 1st May, no? How much did you pay? 1 minute. Maybe I'll write that down. Next, how many did you buy? 1,000. Right? Okay. So 1 second. 1,000 debentures, don't say you purchased for how much value did you pay? 1,05,000. Okay, I think here I've brought in there. But you should not take 1,05,000. You should take 1 lakh. Why? Sir, what kind of a purchase was this? This 1,000 debentures was purchased on a cum interest basis. Cum interest basis means it includes interest. Will we include the interest or exclude it? That's the reason we already found out purchase ka working note. Check your purchase ka working note. What is the net purchase cost? Not 1,05,000. Net purchase cost is only 1 lakh because 5,000 interest was already included. Understood? So we have to take the cost as what, sir? Not 1,05,000 but 1 lakh. Understood this? This is a common mistake. Okay. So you purchase 1,000 debentures by paying a cost of 1 lakh. Okay. So totally you want to sell 900, sir. Totally you want to sell 900. This I'll call it as lot number 2. So from lot number 1, how much will you utilize? 800 because only 800 is remaining. Another 100 debentures will come from lot number 2. So that means you have to calculate for as a proration 1 calculation or 2 calculation? 2 calculation. Like here, 2,50,000 is the cost for 2,000 debentures, original. How much original debentures have been sold now? Only 800. For 800, how much? So you have to prorate it like this. How much will be that? 2,000 will be the cost, or 2,50,000. For 2,000 debentures, the cost is 2,50,000. For 800, how much? How much you said, ma? 1 lakh. That is the cost there. Okay. But are we selling only 800 or 900? 900. So out of 900, 800 came from previous year ka debenture. 100 you will sell from current year ka debenture. Current year ka debenture, 1,000 debentures you purchased by paying how much cost? 1 lakh. Entire you sold or only 100? 100. For 100, how much? Which will be 10,000. So that means the cost for this will be 10,000. So what is the total cost? 1 lakh 10,000. Easy. So sale value is 1 lakh 11,250. Cost is 1 lakh 10,000. So you ended up making some loss or profit? Profit of 125. This way. Okay, sir. All this calculation headache will not come for weighted average method. That's the reason we say you always use weighted average method if the problem does not specify. I'll take you through one problem. Okay. But here we can't do weighted average cost because question specifically mentioned as FIFO method. Okay. That's the reason they gave this lot as 900. So one lot, one debenture will be sold from lot number 1. Another debenture, partial debenture will be sold from lot number 2. So 2 times you need to calculate the cost. That you need to be calculated. And moreover, in the second time when you calculated cost, some interest element was also included. So don't take the value as 1,05,000. We always have to take, after deducting the interest, what is the value? Net purchase price we need to take. Okay, that is the takeaway of this problem. Okay, sir. All these are working notes. Once these working notes are done, easily you can push the data into your ledger. Because what is the journal entry for investment purchased? Investment to buy. So like that, we'll go on passing the entries now. Problem done? No, working notes are done. Now, if this is done, 95% of the question is done. Remaining thing is just putting in the format and updating. Normally, investment in bonds, no, sir, you will have 10 columns. Date, particulars, face value, interest, cost. 5 columns on the debit side, 5 columns on the credit side. Date, particulars, interest, face value, and cost. Cost column here or principal column. Some columns they will refer it as cost, some they call it as principal, it's fine. Principal column here refers to the investment ledger. Interest here refers to the interest account. You remember in your golden days, you used to prepare double column cash book and all. Cash bank column together, or triple column cash book for discount, cash bank together. This is that wala format. Here interest and investment are put together, are combined and prepared as a ledger. Okay. Ideally, I also suggest, so they have not asked interest ledger, no sir. Yes, ideally they have not asked, but in all our problems, no, ICA presents in this format. So I suggest you follow the same format in exam also. Okay, sir. All right. Sir, we don't have to look at the question now. Anyway, we have working note number 1, which is posted chronologically. One by one, we'll go on passing. First, interest accrued ka opening balance. Sir, interest accrued is a liability or an asset? Asset. Asset ka opening balance, where it will come? Debit side. So you'll write it as 2 balance brought down. Okay, how much is the face value? Here, face value also I have. What is the face value of debenture I own? 2 lakh. This 7,500, you will write it in the cost column or interest column? Interest column. So interest column is 7,500, you need to write. What about principal column? How much of debentures did you purchase? You purchased this last year debenture for what value they told? 2,50,000. That is given in the question. Update it here. Done now. All right. Next. Next, look at your table. What is the next transaction? Interest on cum interest purchase. You purchase some debenture. What is the journal entry for investment purchase, sir? Thank you. Thank you so much. I don't know. What is this money concept? Somebody is saying 40 rupees and all. I don't understand. What you can send money also. Huh? What is that part? I am never aware of it. You also don't know. Super chat option. Don't know what is it. What is that, Shiv Charan? I don't know. I think a couple of times you sent that. I thought you were just saying me, mocking me. Yeah. All right. But I don't know. Anyways, no need to send money and all, but don't send it. It's fine. Okay. All right. But I don't know whether you can send also. But you're saying 40 rupees and all. I don't know what it is. Okay. No need to send. Appreciate. Thank you. You're liking the teaching. That's good enough for me. Yeah. All right. Don't have to measure that in money. Thank you. The intention you have now, that is good enough for me. Okay, come back to the question now. I didn't know this only. Yeah. Okay. All right. New things you learn every day, I tell you, in life. Okay. So coming back to this, interest purchase. So you purchase the debenture. What is the journal entry for debenture purchased? Investment account debit to bank account. So that means you will write in debenture account, investment account debit to bank. Sir, okay. When you purchase the debenture, was there any interest included? Yes. How much interest is included? 5,000. So that means, sir, when you purchase the interest, seller would have lost the interest. Seller would have lost the interest. Can you keep quiet or you have to compensate? You have to compensate. So this 5,000 interest you will receive or you have to pay. Since seller has lost it, you as a buyer should compensate. So you need to pay. What is the journal entry for interest paid? Interest account debit to bank account. So that means in your interest account, you'll write to bank 5,000 rupees. Easy now. This is under interest column. All right, and the principal column, you need to show the purchase price. For that, we have already prepared working note number 2. Check your working note number 2. What is your net purchase price? Net purchase price is 1 lakh. That you put it under your cost column or principal column. Like that. Every data is there in our working note. Just that, take it and dump it. Okay. All right. What is the next component, sir? This is over. These two are over. Next will be interest received on holding. What's the journal entry for interest received? Bank account debit to interest. So that means the posting will be what, sir? You'll post it as by bank. How much value we told? 22,500. Face value column, cost column, nothing. Only under the interest column. Next, this is over. Interest on X interest, sale. Okay. So you have sold means now you as a seller have lost interest. So you will compensate or you will get compensated. You will get compensated. Meaning you will ask this interest or you will collect this interest from the buyer. How much interest have you collected? 6,000 rupees. So this interest you are paying or receiving? Receiving. What's the journal entry for interest received? Bank account debit to interest. So that means in your interest ledger, you will post it as by bank 6,000. What is the face value of the debenture sold? 1,20,000. So cost column, what do you have to write? Don't take the price given in the question. You have already done a working note. Check working note number 3. You have sale proceeds there. What is the sale proceeds you have got it? Somewhere we written on 1st November. What is the sale proceeds? 1,28,200. That is the sale proceeds that should come here. Done. And when you made the sale, did you end up making some profit or loss? Yes, you ended up making some loss. I already told you the logic. Loss means it will come on the debit side, credit side, which side? Loss. Loss will come on the credit side. I have already told you the logic. Don't ask me once again. Yeah, no time also. Loss will come on the credit side, profit will come on the debit side. Okay, that we have posted here. Come from the working note. Next, this is over. Next is interest on come interest purchase. Your purchased means seller has lost interest. So you as a seller should compensate. So this 3125 is interest received or interest paid? Interest paid. What is the journal entry for interest paid? Interest account debit to bank account. So you'll write again here bank 3125. Face value of the debenture purchased is 50,000. Cost column, what will you write? Net purchase price, which is there in working note number 2. Come back to your working note number 2. What is your net purchase price? 54,500. Check, have they updated 54,500? Yes, like that. Okay, G. All right. Next, what is the next one? Come interest sale. So if you have sold the debenture now, means you as a seller have lost interest. You will recover this interest from the buyer. So this 6,750 interest you will pay or you will receive. Receive. What's the journal entry for interest received? Bank account debit to interest. So the posting will be by bank 6750. Yeah, face value of the debenture sold is 90,000. Okay, G. And what about cost column? Cost column, you have to show net sale proceeds. So do you know the net sale proceeds on 31st December? Yes. How much is that? 1,11,250. Updated here. And when you sold these debentures, did you end up making some profit or loss? Yeah, you ended up making some profit of 1,250. Profit means credit side, debit side, which side? Debit side. More importantly, which column? Don't put it under interest column or face value column. This profit or loss you will show under the investment column. Investment column here refers to principal. If you don't like to call it as principal, you can also call it as cost. Some problems may ICA material refers to this as a cost. That is also okay. Next, what happened? Interest received on holding. What's the journal entry for interest received on holding? Bank to interest. You will post it as by bank 10,500. Done. Doesn't affect face value principal column. Then interest accrued ka closing balance. The interest accrued is an asset. Asset ka opening balance comes on the debit side. Closing balance will come on the credit side. How much value? 5250. Face value of the debenture remaining is 1,40,000. So by balance carry down 1,40,000 here, 5250 here. This you will arrive it as a balancing figure. If you want, you can calculate also, but you can get it as balancing figure also. So all these interest are P&L components. Interest where it will be transferred to P&L account. All the interest put together, you transfer it off to P&L. Ledger balance. That's all. Okay, sir. Lengthy but very easy. Just that you can make a lot of clerical errors here. Instead of 3 months, 4 months, instead of posting the components in the principal column, you may put it in face value column or interest column. Instead of posting profit on the debit side, or you may post it on the credit side. Like these sort of small mistakes can happen unintentionally. You know it, but fast when you're writing fast, these sort of small mistakes can happen. So watch out for that. So solve it once if you have time and see what mistakes you're doing. If you're not doing any mistakes, shabash. Okay. Otherwise, identify and correct it before the examination hall. Let examination not become your practice hall. Okay. All right. So this is about bonds or a debenture purchased as an investment. You can also purchase equity share as an investment. So what if you have equity shares? Let's take up one question. Okay. Already time, madam. Okay, no problem. Time is running like Z. Target I'm crossing. Every topic at target I'm crossing. I don't know why. Okay, fine. No problem. Nonetheless, we still need to cover it. Sir, this one, maybe this question quickly I'll just tell. Innovative Garments Company, they've invested in shares of another company on 1st October at a cost of 2,50,000. So they purchased some shares. Earlier, they had purchased gold and silver also. On March 2020. Sir, you are in which year? October 2022. That means current year is 2022, 2023 that we're talking about. You purchased gold which year? It'll be first March 2020. That means you purchased the shares debenture on all 2-3 years back. That means what, sir? This gold or silver looks like a short-term investment to you or a long-term? Long-term. Market value of all the instrument they've given. Okay. So basically you need to guide how the investment should be valued. But nowhere they have given the intention of holding. Meaning they have not told whether it is a short-term or a long-term. Now you have to make the assumption. Okay. Sir, shares you purchased it in the current year. So you will give a subjective answer. If share is classified as a short-term investment because you purchased it which year? Current year. Okay. So if your intention is to hold it for less than 12 months, then it becomes short-term investment. Short-term investment will be valued at cost or market value, whichever is lower. How much is the cost? 250. How much is the market value? 225. So in this case, you will value the investment at 2,25,000. However, if you assume, no, though we might have purchased it in current year, we have an intention to hold it for more than 12 months. In that, shares also can become. In that case, shares will become long-term investment. If it is long-term investment, you will value the shares also at cost. What is the cost? 2,50,000. Do you know the intention of holding? Not given. That means you will give a subjective answer. If it is short-term, you will value at this. If it is long-term, you will value it at that. However, since they are saying gold and silver was purchased last year, they have not given anything. Last year, 2 years before, I'm going to assume that these are what kind of investments? Long-term investments. So long-term investment should be valued at what value? Cost. How much is the cost of gold? 4 lakh and silver kite is 2 lakh. Market value will be ignored. In fact, market value is lower than cost or much higher than cost. Cost of gold is how much, sir? 4 lakh. Market value is 6 lakh. So appreciation, do we record it here? No. As per AS 13, we don't record the increase. We only record the decrease. So long-term investment will be valued at cost itself. Okay. So that's all. You need to give it as a subjective answer there. All right. Yeah. Yes, sir. Somebody is putting you some extra pointers. They are saying, sir, shares and debentures both should not come in exam, sir. Both comes means go in the only. Half an hour for shares, half an hour for debentures. It's easy, but it will become really, really lengthy. Sometimes it has come. We have also solved such question in our regular class. Combo questions. You have some debentures also, you have equity shares also. But the chance of they coming as a single question in exam is little rare. But it can come also. Not conceptually difficult, just that it will become very lengthy. So you have to be extremely fast in completing the paper. That's all as a crux. Okay, fine. Anyways, I don't know whether it will come or not. Anyway, I've taught you both. If it comes also, you should be able to solve it. The only question is, will you solve it within the stipulated or required time? That's the only essence. Okay, let's go over one more question. If you have equity shares as an investment, what to do? Now, on 1st April 20x1, Sundaranga. He purchased a had. That means, did he purchase it in the current year or it's there since last year? He's holding this since last year. That means this is what, sir? Current year ka purchase or opening balance? Opening balance. How many shares we has? 25,000. He purchased this at what value? Book value of 15 rupees. So 25,000 into 15 you do, sir. How much is that? Don't want to do, okay, I'll only do 3,75,000. Correct? Okay. Sir, in shares, no, sir, you don't have to present the working note in that format because when it comes to shares, no, there will be a lot of adjustment. If you try and present it in like last problem, okay, the number of working notes will become drastically big. Time also will be a lot more. It will take a lot more time. So if the adjustment is simple, don't put any working note. Here you have 25,000 debentures. Each ka book value is how much? 15. Do you need any separate working note for this? No. So directly we'll capture this in your ledger. What's the journal entry for? It's an investment. This is investment account ka opening balance. Where will you write opening balance? To balance brought down. For shares, no sir. For debentures or bonds, what was the columns? Date, particulars, face value, interest, principal. Okay, same thing. Here, no sir. Instead of face value, substitute with number of shares. Because here, no sir, there will be some bonus shares on issue. And bonus shares, will you, as an investor, should you have to pay any money for bonus shares or you'll receive it at free of cost? Free of cost. So instead of face value, replace face value column with number of shares. Replace interest column with dividend. Cost column, you keep it as it is. Institute may does not put in some problems may they bring in dividend data. Dividend column they have. Some problems may they don't bring in dividend data. So I think the choice is yours, whether you want to do it or not. But in all our regular class, I had also shown you with the dividend. Here, you can follow whatever you got. Okay, now. All right. Next, first, opening balance of debentures. Opening balance of equity shares. How many shares? 25,000. 25,000 into 15 is how much? 3,75,000. So number of shares column may 25 you write. Amount column may you write 3,75,000. Okay, now. Next, what happened? On 20th June 20x1, he purchased another 5,000 shares at 16 per share. Have they given any brokerage stamp duty? No. So that means simple working note. You have to put up a working note or inside only we will show. Inside the ledger only you can show. How many shares you purchased? 5,000. Each ka value how much? 16. 16 5s are 80. So that means this is obviously what, sir? 80,000 rupees. So what is the journal entry for investment purchased? Investment account debit to bank account. 5,000 in the number of shares column. 80,000 in the amount column. Over. Don't for everything, don't put a working note. Only if they give brokerage stamp duty and all, then you prepare a working note. I've showed you all this in regular class. Okay, next what, sir? Directors of X Limited announced a bonus and rights issue. Obviously. No dividend was payable on these issues. So you don't have to pay any dividend on right shares and bonus shares. Usually on right shares and bonus shares also we will pay dividend. But here problem is clearly saying don't calculate the dividend. So means will we calculate dividend and bonus on bonus and right shares? No. Problem ka requirement. Don't ask me why. I will not question the question. I will not question you also. Okay. The terms of issue are as follows. You give bonus shares. What is a bonus ka date, sir? 16th August. Bonus is given in what ratio? 1:6. Meaning if you own 6 shares, you will get 1 as a bonus. If you own 6 shares, you will get 1 as bonus. So what is the bonus ka date again? 16th August. Till 16th August, how many shares does the company have? They already had 25,000 before. 5,000 additionally they purchased. So how many shares they have now? 30,000. 25 plus 5. So totally how many shares? 30,000. For 6, 1 is the bonus shares. For 30,000, how many? 5,000. Okay, sir? Alright. So don't say CRR account debit to bonus to shareholders account. Daivame. We are passing the journal entry not in the company issuing bonus shares. We are passing all this in the books of investor. Okay. Alright. You are right. But you need to pass that in the books of the issuing company. Are we doing the books bonus? The company who issued bonus shares. In their books, are we passing the journal entry or investor? Investor. Investor received the bonus shares. Did he pay any money? No. So that's the reason in the investment column, no, in investment ledger, we have number of shares column so that we can show all this bonus. So in the investment ledger, just write to bonus. How many bonus shares you have received? 5,000. Cost column, write 0. Why? Because bonus shares are received at free of cost. So that means amount is 0. That is the reason. All right. Okay. Next, right shares they have received. In what ratio? 3:7. So 3 right shares the shareholders are eligible to buy if they are already owning 7 shares. What is the rights ka date? 31st August. Okay. At what price, sir? 15. First, let's calculate number of eligible right shares. So old shares. If you have 7 shares already, you are eligible to buy right shares. Right shares are also given to existing shareholders only. Okay, but not at free of cost, but at a lesser value. Let's say market value of the share is 50 rupees. Market value of the share is 50 rupees. Face value of the share is 10 rupees. Market value is 50. You will make the rights issue not at 50 rupees. Let's say you will give the right shares at 23 rupees. You gave the right shares at 23 rupees. Market may the value of the share is 50 rupees. Okay, but here I am issuing it at what price? Maybe I'll make this as 20. 20 I'll make it. Okay, rights price is how much? 20. That means compared to market price, you are giving heavy discount. No? So this is your right shares. So right shares are also given to existing shareholders, but at a discounted price. Don't calculate the discount from face value. You're not issuing right shares below face value. Companies Act says no share shall be issued at a price below face value. We are not issuing right shares below face value. Here when we say right shares are issued at discount, the discount is calculated from market value perspective. Compared to market price, we are issuing the right shares at a discount. That's all. So right shares, I used to say, is like coupon. Is your like your Amazon ka coupon. If you have Flipkart or Amazon ka coupon, what you can do with that? You can utilize the coupon and buy some goods. Okay. Or if you want, you can sell this coupon to your friend. If you're crazy, you can also tear it off. Don't tear, give it to me. I will take it happily. Yeah. All right. So the tearing option will not be there over here. There will be 2 options which will be given for right shares. So what here the right shareholder will do is, he will utilize the right and he will buy the right shares. That we call it as rights subscribe. If the shareholder utilizes the right and he buys the shares, we call it as rights subscribe. Or what he can do, he can sell this rights only to somebody. That we call it as rights renounced. So first he has eligible. How many eligible right shares the shareholder can buy? If he has 7 shares, he can buy 3. How many shares currently he is holding? Check this table. 25 he had at the beginning, 5,000 he purchased, another 5,000 he got it as bonus. Keep the date in mind. Bonus came first, then right shares is coming. So on the right shares, how many shares is he holding? 35,000. If he has 7 means 3. 35,000 means how many? How many right shares he is eligible to buy? 15,000. Do you think he has to buy 15,000? No, his choice. Let's say what he has done. Check here. Shareholders were entitled to transfer the rights in full or part. Sundar sold 33%. That is 1/3 of his entitlement to Shekhar at 2 rupees per share. So Sundar, what did he do, sir? 1/3 of the rights, did he subscribe or renounce? Renounce. How many shares he was eligible to buy here? 15,000 shares he was eligible to buy. In that he renounced how much? 1/3. 1/3 of 15,000 is how much? 5,000 shares. This 5,000 shares, did he buy or he gave this right to somebody else? He gave this right to somebody else. Will he give this right to somebody else at free of cost or he's charging some money? On each share, how much money he's charging? They told 2 rupees. So 5,000 into 10 is how much? Or 5,000 into 2 is how much? 10,000 rupees. For Sundar, this is an income, no? Because he sold his rights to somebody and collected 10,000 means this is an income. This income will be straight away transferred off to P&L account. Are we preparing P&L account here? Are we preparing bank account here? No. That means this transaction, will it come in your investment ledger? No. So just mention in the working note and say it will not get captured. That's all. Okay, Saru. Sir, 1/3 of the rights he renounced. That means balance 2/3 he purchased. Subscribe. 15,000 he was eligible. In that 1/3 he sold means 2/3 he subscribed. 15,000 into 2/3 if you do, obviously you will get what, sir? 10,000. Or if you can say in 15,000 if he sold 5,000 rights means balance 10,000 he subscribed. Like that also you can calculate. Right shares, if he wants to subscribe means he has to pay money and only buy the right shares. Because right shares are not given at free of cost. Right shares are given at a discounted price. And each right shares price is how much? 15. If any shareholder wants to buy right shares, on one right share he has to pay 15 rupees. How many right shares here the investor wants to subscribe? 10,000. And one share, how much he has to pay? 15 rupees. So total will be how much? 1,50,000. This much he sold or he purchased? He purchased. So right shares is also normally equity shares only. Yes, no. I mean, this is also what, like investment purchased. What is the journal entry for investment purchased? Investment account debit to bank. How many shares? 10,000. What is the value? 150. So you'll write here to bank and number of shares column 10,000. Cost column 1,50,000 or amount column 1,50,000. Easy. Next, what happened, sir? Dividends. Dividends for the year 31st March 20. X1. 1 minute, sir. We are in, what is our current year? They gave opening balances 1st April 20x1. So current year begins on 1st April 20x1 and ends on 31st March 20x2. This is the current year that we're talking about. Now check. Dividend for the year ended 31st March 20x1. Current year is ending on 31st March 20x2. X1 relates to previous year. So previous year you have declared the dividend at the rate of 20%. Normally that's the process now, sir. Once the year ends, then you will conduct the AGM. In the AGM, you will declare the dividend. Correct? So you declare the dividend for last year at the rate of 20% and it is received by Sundar on which date? 31st October 20x1. Correct? Now, dividend on shares acquired by him on 20th June are to be adjusted against cost of purchase. What does that mean? Is, sir, in the check here. Last year, did Sundar have any shares? First, we'll do that calculation. Last year, how many shares Sundar had? 25,000. Each share ka nominal value or face value is how much they told here? 10 rupees. Okay. So last year, Sundar had 25,000 shares. This dividend of 20% relates to current year or last year? Last year. Sundar had 25,000 shares in the last year. So should he receive the dividend on this logically? Yes. Will he receive this? Yes. This is pre-acquisition dividend or normal dividend? Normal dividend, because he already had shares in the last year and dividend also relates to the last year. So calculate, sir. First we will do the dividend. First on normal dividend on how many shares? 25,000 shares. Dividend is always calculated on the face value. 25,000 is a number of shares. Into 10 if you do means you're going to get total face value of the shares held by Sundar. We want only Sundar ka dividend. We don't want total dividend. What is the total face value of the shares held by Sundar? 2,50,000. And how much dividend the company has declared? 20%. So multiply that. How much is that? 50,000 rupees. This is your pre-acquisition dividend or normal dividend? Normal dividend. What is the journal entry for normal dividend? Bank account debit to dividend income account or dividend received account. Next entry will be dividend received to P&L account. So this dividend of 50,000 will be transferred off to P&L. Am I preparing dividend ledger here? No. Am I preparing P&L ledger here? No. So that means this will not be captured here. If you want, you can prepare dividend ledger also. If at all you show dividend means this particular transaction, you will be able to capture like that. Okay. Now one more. That is not the problem here. But the problem is one more. What are they saying? Dividend for the shares acquired by him on 20th June 20x1. So 20th June 20x1 means the shares were acquired last year or current year? Current year he has purchased the shares. Check here. Dividend for shares acquired by him on 20th June are to be adjusted against cost of purchase. Cost of purchase means cost of investment. What in the shares, no sir? Current year if you buy any shares, no sir? Normally shares you can buy on something called come right basis or come dividend basis. You can purchase the shares on what basis? Come right or come dividend basis. If you purchased any shares on a come right or come dividend basis, what it means is after you have purchased, if company issues or comes up with any rights issue, you will be eligible to buy the right shares because you have purchased on what basis? Come right basis. You as an investor will be eligible to get right shares. You as an investor will be eligible to get dividend even if that dividend relates to last year. When did you buy the shares? Current year. So ideally, if any dividend is declared for last year, should you get it? No. But on what basis have you purchased the shares? Come dividend basis. If they use the word either come right basis or come dividend basis, then you as an investor will get right shares also, or you are eligible to buy right shares also. You are eligible to get dividend also, even if that dividend relates to last year. Now you think logically, last year did you have this 5,000 shares? No. So should you logically get the dividend? No. But you have purchased on what basis? Come right basis or come dividend basis. That means will you receive the dividend? Yes. What is the nature of this dividend? Pre-acquisition dividend. This the nature is pre-acquisition dividend. What is the journal entry for pre-acquisition dividend? We already did in consolidated financial statement. What is the journal entry for pre-acquisition dividend? Bank to investment. Pre-acquisition dividend has to be reduced from cost of investment. That is what they're telling you. Whatever dividend you receive on 20th June are to be adjusted against cost of purchase. So they say the dividend amount, you reduce it from cost of investment. Why? Because this dividend is a pre-acquisition dividend. Indirectly, problem is telling you this dividend is a pre-acquisition dividend. Okay. But nowhere they told shares is purchased on come right basis. No, sir. But they told in this problem, dividend on shares acquired by him are to be adjusted against cost of purchase. You're receiving dividend on these shares. You can receive this dividend on shares only if you're purchased on what basis? Come right basis. Even if they don't use this word, if this line is cut off, dividend received on 20th June, if they cut off this word, still do the same adjustment because our institute study material assumes every shares purchased in the current year is on a come right or come dividend basis. Even whether it is mentioned in the problem or not mentioned in the problem, ICA study material makes this assumption. Okay, so if dividend is declared in the current year, but if it pertains to last year, and if current year, if you have purchased any shares, you will calculate dividend on it, and you will treat this dividend as what dividend? Pre-acquisition dividend, irrespective of whether they mention come right basis or come dividend basis, because that is the assumption study material is doing. For exam, you also make the same assumption. Is that fine, sir? Hidden adjustment, this is. Every problem, they do this adjustment. That's the reason. Okay, carry on. That means here we have only normal dividend or also pre-acquisition dividend. Also pre-acquisition dividend. Pre-acquisition dividend you will receive on how many shares? 5,000 shares. Each share ka face value how much? 10 rupees. Dividend is calculated on face value. So on this 5,000 shares, how much dividend will you get? 10,000. So logically, should you get the dividend on this 5,000 shares? No. Why? Because this 5,000 shares is purchased in the current year, but dividend relates to the last year. Logically, you should not get it. But reality, are you getting? Yes. So what is the nature of this dividend? Pre-acquisition dividend. What is the journal entry for pre-acquisition dividend? Bank account debit to investment. How much value? 10,000. And this adjustment is done as per what, sir? Accounting standard 13. AS 13 only says that any pre-acquisition dividend should be reduced from cost of investment. So this, are you preparing investment ledger here? Yes. So will you post this entry into the ledger? Yes. In investment ledger, you'll post it as what? By bank. So have they posted as by bank? Yeah. They've written dividend. But what sort of dividend is this? Pre-acquisition dividend. Yes, sir. Guys. Oh. Yeah. All right. Next, on 15th November 20x1, Sundara, he sold off 25,000 shares. This was one baki. Okay. He also sold shares at a premium of 5 per share. So what is the face value of the share? 10. He sold at a premium means the selling price is how much? 15 per share. Any brokerage data and all is given? No. So that means what are the sale proceeds? 25,000 into 15. How much is this? 3,75,000. So first we'll do profit or loss ka working note. What is the sale proceeds, sir? 3,75,000. Correct? Sir, if you have sold the shares means, okay, maybe. What is the journal entry for sale of shares? Bank account debit to investment. So in your investment ledger, you'll post it as by bank 3,75,000. Number of shares sold is 25,000. Sir, whenever you sell the shares, you will either end up making some profit or some loss. So have they told how to compute profit or loss in this problem? They need us to prepare investment account, which we are preparing, and shares are to be valued at average cost basis. So here they're saying don't use FIFO, use average cost. You know how to do FIFO. One problem we've already gone. Here now we are working it under average cost basis. Okay. If they don't mention the method, always assume average cost because that is easy. Okay. So how do you find out cost? To find out profit or loss, you need a sales price and a cost price. So how do you find out cost price under average cost? Is simple. How do you find average cost? If they give you 3 years ka profit, how do you find average? Total profit divided by number of years. Here, can you take number of years? No. Here you are purchasing number of shares you are buying and selling. So that means how do you find out the average cost? Total cost divided by total number of shares. Yes or no, sir? That's all. So total cost. When did you sell? 25th or 15th November. Till 15th November, what and all is your cost? Check. First, 3,75,000 is a cost. Yes, take your calculator, add it. Then you purchase right share by paying, or you purchase additional shares by paying 80,000. Add it. 375 plus 80, 455. For bonus shares, is there any cost? No cost, 0. Then right shares 1,50,000. Add it. So how much is the cost? 6,05,000. Don't be in a josh. Don't add only this. Yeah, all these are cost only, no doubt. But there is one more component. Pre-acquisition dividend. What should you do for pre-acquisition dividend? Reduce it from cost of investment. So do not forget to reduce 10,000. So minus 10,000 you do. How much is that? 5,95,000. So this is all your cost for purchase. 10,000 rupees is pre-acquisition dividend. You should not forget to reduce that. This is the total cost divided by total number of shares. Add up all those shares. 25 plus 5, 30. 30 plus 5, 35. 35 plus 10 is 45. So this is the cost for 45,000 shares. This is the cost for 45,000 shares. How 45? All this addition. Okay, now entire 45 did you sell? No. In fact, if you do this, what are you going to get? If you do this, what are you going to get? You will get cost of one share. You'll get cost of one share. We want cost of one share or cost of shares sold. Sold. How many shares did you sell? 25,000. So multiply by 25,000. So if you want it as formula, it will be total cost divided by total number of shares multiplied by the number of shares sold. You really have to mug it up, or you can construct your own. So what is the cost? 330. So 370. You have sold it for 375. Cost is only 330. So you ended up making some loss or profit. Profit. How much profit? 44,445. Profit, where it will come? Credit side, debit side? Debit side. So post it on the debit side. Then it's your balancing figure. Get this as a balancing figure. Either you can calculate also or get it as balancing figure. It's fine. Nana. They also asked you to prepare P&L account. Only extract. Two things will go off to P&L. One is what, sir? One is rights you renounced. When your rights you renounced, the 10,000 you got, the journal entry you can pass as bank account debit to rights income and rights income account debit to P&L, or directly you can pass the entry bank account debit to P&L account. Okay, this is your rights renounced. Okay, now, so where will you show this in your P&L account? You will credit as by sale of rights 10,000. Yes, sir. That's all, or you got some normal dividend also. Dividend also is an income. Income will come on the debit side of P&L or credit side? Credit side. You will again show dividend 50,000. Okay. And then when you sold some investment, you ended up making some profit. No? How much profit? 44,555. That also will come. That's all. That's all you can prepare because no other data is given. So hence we are not calling it as P&L. We are calling it as an extract. Extract means whatever P&L information is there, only update that. Rest is not required. Okay, Saru. So with this, AIS 13 we have fully completed. Thank you.